These were the trades from yesterday that I had planned, and unfortunately, I had a really busy day yesterday, so I didn't take any of them. But yeah, well, they don't look too bad, huh, in hindsight. You think about the idea that I had. Um, in hindsight, they look pretty good. So I had such a busy day yesterday. I didn't wasn't even looking at the charts, and so if I'm not 100% focused, I'm not going to take a trade. And yeah, but yeah, it doesn't look too bad. So I think that's a good. It's a good confirmation because um, I did say it was range bound, and it's range bound. It is range bound. Let me get rid of them now. So how to take a trade now on Bitcoin? That's the question. Now let's have a look at the daily candles, and then let's have a look at the weekly candle to see what's in play right now. Let's just have a look at the higher time frame candles first. So we're halfway through the 3-day candle. The week candle closes tomorrow, which is looking like it could probably end up either as a red doji, or if it comes up, it could be a green doji. Potentially, we have to see how it closes tomorrow. I think red would be better, personally, because red signifies that the bears are in control, and like if it was to end right now, the way we look at it now, I think that would be a bullish candle, simply because red candles means the bears are in control because they were able to close lower, but then you would have decreasing volume and they weren't able to close lower than the previous week low, which is their target. So the theory is that bulls are trying to close higher than the previous week high, previous candle high, and the bears are trying to close lower than the previous candle low. And it's a constant game, so to speak. It's a constant repetition of bulls versus bears trying to close the price either higher or lower. And it's all about the close, really. It's not about how far the price gets. So at the moment, it looks like the bears aren't successful. And then when you look at how far the price got down, they weren't actually able to take the liquidity from this wick. You see, just by a fraction, it looks as though they failed. So even though most people would prefer, like most traders would prefer the liquidity to be taken, if it's not taken, that signifies strength on behalf of the bulls. Yeah, because the bulls were able to defend their low to prevent the price going lower. Doesn't mean it won't be taken in the future. So just because it's been defended in one candle, potentially, there's no reflection on the future. It could go down and take that liquidity, and ideally in the best case scenario, whatever happens in this range in the future, and we don't know how long this range is going to go for, but honestly the best case scenario before we go up is to clear the liquidity. You want the liquidity cleared. Yeah, if the liquidity is cleared and the price goes up, that's better, because you're clearing all those leveraged longs. The price is still going up. Yeah, when you clear leveraged longs, they all sell, because their stop losses are market sells. So when you have so many longs market selling and the price still goes up, that's bullish. So it's an indication of bullish behavior for the liquidity at the lows to be taken and for the price to continue going up. So you kind of want that to happen before the price ever continues to go up in the future. So we'll be looking out for that. I mean, look at that. That's like a real, look at that. Basically, you see what happened here, and just to understand the dynamics of what's going on. In this red candle push in this hour, there's a lot of volume. See that? A lot of volume. And then what happened was a lot of these shorts, basically in these two candles, a lot of shorts got trapped. And I'll show you actually, because it's interesting, because I was looking at this on Exo afterwards, not while it was happening because I was busy, but I was looking at it on Exo, and for most, this is basically Chinese to most people, like Japanese, like you can't read this. This is like, what the fuck is this shit? And when I first started looking at this, I was exactly the same way. I was like, what the hell is this bullshit? I can't understand this. And obviously I still don't understand it. I do understand some things, right? So firstly, yesterday I was talking about bearish divergences on the CVD, which obviously played out because the price was over here and the CVD was going up, but the price was going, technically the price was going down because it was making lower highs. And obviously look at that, it did play out. So you have to be very careful when it comes to the bearish and the bullish CVD on exo charts. I've learned that if it's telling you bearish CVD, you don't long. You could short actually. And I was almost looking for a short yesterday, but I don't like shorting the lows. I want to short the highs, you know, so I'm not just going to chase the short unless it's a planned short. But anyway, by the by, when you look at this, obviously it's giving you a lot of information, but in a gist, that's the way the price has moved yesterday. And this is a 5-minute time frame, so each one of these bars, even though they look really messy, are 5-minute bars. This is the open interest. Basically, it's telling you whether people are taking loans to take leveraged longs or shorts. So as if it's going down, it means leverage is closing, and if you get this like blue bar like that, it means leverage is opening, so the new leverage is being taken. And then obviously you've got the CVD, which signifies market orders. So market orders are not limit orders. It's market orders are when someone is filling their order at whatever price, the market price, and that's the kind of order which pushes the market orders. Limit orders don't move the market. It's the market orders that push the market. You have to understand these ideas, because once you understand these ideas, it helps you to make trades and plan for trades and understand why things happen. The why is so important. I think when you understand the why, it will help a lot. But anyway, what the first thing you notice as I zoom in on yesterday evening's low is these liquidation bubbles. You see this bubble here? This button, the bigger they get, the more liquidations you get. Yeah. So basically on this whole down move, there was a lot of liquidations, and then you get this massive liquidation event. See that? That's a big liquidation event. So that's the first signal that you're looking for on exo charts for a reversal. And if I go back into price history, you see when you get these liquidation events, these bubbles, sooner or later the price reverses. Not always, but sooner or later. Not always. Okay. So it's a higher probability to see liquidation. So you see the liquidations, that's number one. And then the other indication in hindsight is when you look at this, these are 5-minute candles. Basically, this is the candle of interest. And then it basically, you see that the OI went up, the open interest went up by 6.7 million. And you had 8.2 million longs come in in a 10 million candle. So massive longs, massive amount of longs in comparison to the average, the aggregate. Yeah. So in comparison to the shorts, here you can see it's minus 2.7 million, minus 3 million, minus 2.7 million, minus 3 million, minus 2 million shorts, but you had this crazy long. So it was a big long, and the long was a leverage long. It was a big long, right? That's your second indication when you're looking at a reversal on XO. And then obviously the third indication is to see how the shorts were trapped, right? So basically what you're experiencing here, what you're seeing is people are shorting, and the way you can tell that people are shorting is the price is going down, the OI is going up, here and here, and obviously here you can see the OI is going up and the price is going down. So people are shorting into the lows. This was the liquidation event. So this is where the longs were liquidated. There were some liquidations here, but ultimately what happens is when the price comes up the second time in this candle, yeah, you can see that the OI goes down, the price goes up. So basically that means that some shorts closed out. So you can not only are you seeing an injection of longs, you're also seeing now that shorts are closing. Yeah, so there's a second indication. And what's more, the price is now closing above this low area, and then you get another injection of longs coming in here. And what happens is that suddenly all of these shorts at the lows get trapped. They're called trap shorts, and that causes a lot of shorts to start closing their positions at market, because that's the only way they can fill. And so you see on this candle here, you have a 3 million longs, 7 million candle, and the other indicator, and it's hard to see, but you'll get this in the future, is you can see lots of, you see these like black rectangular numbers. That means that orders weren't filled. So it means the price slipped. And when the price slips, that means that's a good sign, because it means you don't have people shorting. It can't fill, so the price slips. And that's kind of what you want to see when you have to zoom into that. There was a lot of things that were telling you in EXO that this was the reversal, and obviously it just exploded. But I think the key indicator for me when you're looking at EXO was this candle here, this 8.2 million longs with increasing OI after a liquidation event. And that's basically what happened. Someone saw that all these longs were liquidated, they just longed basically, and the rest is history. The rest is history. And here the shorts here were liquidated on this liquidation bubble, and then obviously the price started to slow down, and now the price is just going sideways. All right, so this is interesting. Coming up to current price action, to the current price action that we're looking at, when you're looking at this, you see this CVD goes down crazy like that. Yeah, that's a market sell. Yeah, it's a market sell. That's quite a large one actually. Let me see where it corresponds to on these. That's a short, you see that? So that's a minus 5.8 million with increasing OI of 4.5 million. So someone's taken a big short, a couple of big shorts here. So someone has shorted this. Now, the way to tell if there's the way to tell that if there's bearish bullish absorption, I'll tell you. So there is actually, you can see that this is actually quite bullish, and the reason why it's bullish is because the CVD goes down below these lows here. Over here you see the CVD made a low, but the price in that moment here didn't actually make a low on the price. So effectively what this is saying is that just shorts were absorbed, and you can see on the OI that the OI goes up. So these are actually big shorts in play, and the shorts are being absorbed. So what we're experiencing now is a little bit of bullish divergence, and that's kind of what you want, because you know that there are limit longs, there are limit buys, big ones on the market. So all of these shorts are being absorbed. So they're shorting and the price isn't moving down. That's basically what's saying. They're shorting at market. This is all market, and the price isn't going down. They're being absorbed by bigger longs, but they're spot longs. And if eventually you'll get exhaustion of the shorts, you get exhaustion of the sellers, and then the price will move up. And then what happens is these shorts here, if the price gets above here, above the daily open, these shorts are going to market close. So they're going to market close. So they're market longing. And that's what that's going to push the price up. Yeah, that's going to push the price up. And that's kind of where you want to be. You want to be in this kind of position with a long when that happens, because suddenly you get to move up. So this is actually quite bullish. So I think because of what I'm seeing here, I think maybe when you go back to Bitcoin, you'll be looking for a long right now. Maybe you're looking for a long. So let's have a look for longs. Let's see what we get. So it's good to have a look at EXO and try and gather what it's saying behind the scenes, and then we can plan for longs. Obviously you're going to long because these candles are off the charts. Look at these, high volume. Yeah, we're kind of consolidating above these highs now, as you can see there. That's pretty bullish. So yeah, I mean, this is a good position to long, really. Where's your invalidation? That's the hard part, because naturally there's no invalidation closer to the price action right now. You'd have to put your invalidation there. Yeah, and that's quite a distance. So what you're trying to do now, what we're trying to do is find a closer invalidation. That's what we're trying to do now. That's the objective. We're going to take a long here. Technically that's your invalidation. So to make this long profitable, not profitable, but justifiable in terms of the risk, you need to, at the very least, you need to get 1-to-1 at the very least, because that means that 50% of your trades have to be right. At the very least, you need a 1-to-1 on this kind of trade. And then obviously you're not going to risk more than maybe 1% or even 0.5%. And so you'd have to go into this tool, enter in your risk amount. Don't know if people have used this before, but it's very good. And you enter your account size, whatever, say $300, and it will tell you, should tell you it should tell you the quantity of trades, 0.01. That's your trade. So you're technically you're meant to enter 0.001 BTC. That's your long, and then you're only risking 0.5% of a $300 account, and you would set your target, and that would be your stop loss, and that's your trade. And that's just by using this tool, which is really good. So definitely if you change that to 1%, see it says 0.002 Bitcoin, and obviously depending on your account size you can change that to whatever. Let's say your account size is $15,000 and you want to risk 1%, then this will tell you that your quantity of Bitcoin that you're longing with is 0.109 Bitcoin. That's your long. That's how much Bitcoin you're buying. And then with this kind of stop loss, which would be a 1% risk, and then that would be basically a 1-to-1 trade. So for a 1-to-1 trade, you need a 50% or more success rate to be a profitable trader with this kind of trade. Yeah. And obviously if you go up to this, if you can do this, then you only have to be successful over 33% of the time to be a successful trader. So trading is all about consistency. You know, it's all about being consistent and taking the best trades. But I think the stop is too far personally, unless there's a higher time. Like when you're charting on the 1 hour chart, yeah, it's too risky. If this was like a day trade, you know, like a daily, if I'm charting on the daily chart, and then it could make sense, because then I'm saying, well, yeah, that is my stop loss there, these lows, and actually now I'm targeting up there, or at the very least, you know, then you'll be targeting the golden pocket to there. That would be your target. And so that would make more sense, because you're risking 1 and your reward is 2.69 just from this current position. Yeah. And then if you want to, and this is the other strategy that someone could use, and so you do exactly the same thing. You put your account size in USD, whatever, who knows, $2,000, and it will tell you, it gives you all the information. You're risking 0.014 Bitcoin. That's your buy. You buy that much Bitcoin at this price. This is your stop loss, and then your risk versus reward is a 2.69. Tells you the targets and everything. It's really good. So I think I mean, the way to really do it is to scale in, is to ladder in. And so you wouldn't necessarily come in this kind of trade, you wouldn't necessarily come in with a full position. What you'd probably be looking to do is come in with like half a position or something. And then if the price does move up, then you can add the rest. You can add the next half, and your aggregate, your average position will be halfway. If you have half there and you do get stopped out, then you're only getting stopped out with half a position. Or if it goes down, you could add the rest, you can add the other half, and so your average actually is lower down here. But obviously if that happened, as it comes back up, you'd have to take that half back out. Yeah, because otherwise it could come back and form resistance off that neckline and continue. So you have to be careful with that situation as well. It's never good to increase your position when you see weakness. It's always good to increase your position when you see strength. It's always adding to strength is the way. Never add to weakness. That is not a good plan. It's a terrible plan. Right. So maybe that was a bit useful. This is looking quite good. I really like this actually. This is nice price action. You've got bullish CVD. I kind of wouldn't mind taking these lows, but you know, that I think that would be the best trade. If you really want an amazing trade, let's take these lows. Let's FP these lows and let's go up. You know. Something like that. That would be a really good trade. If that happens, that would be amazing. Nice SFP of these lows. Go long. And the reason why you would take an SFP is because if anyone is in a short, they will take profit once these lows are taken. You want that. And they will be taking profit market. It'll be market profit. So they'll be taking market longs to take profit. Even if the short wanted to close their position, that will be their first opportunity to close their position without taking a loss. If someone's in a short now and they're not happy with the price action, yeah, rather than just closing now, the only options they would have is to limit out or to wait for this first opportunity, would be some kind of local SFP before they did that. So actually you're buying with the turning of the price, where shorts are potentially closing their positions, and then obviously as the SFP happens, you're going to have new market longs open as well, because I think people are looking to long right now, and that would be the entry. An SFP of this low would potentially be the entry, I think. So I'd be quite interested in this this long right now. That would be quite interesting. The problem with this move up is it's so impulsive that if for some reason we do lose this line and we do go down and we form resistance off that neckline that we just broke, then I do expect the price to go down much deeper. Yeah, and naturally I think, I mean, in that case you could short that too, but I think because the CVD is showing bullish CVD, I'd be very cautious. I'd prefer for a long in the lows or here and with an SFP. But if it was to go down, I suspect that this line that I have, this previous SFP line, will be a good position to long. So let me just draw that as well. Actually, the golden pocket is coming a little bit higher. So where does that level come to? Let me just do the log on. I hate the price. I should get rid of them actually. That makes some difference. So that's 786. Yeah, I think I'd love to kind of, I think in my mind, I'd wait. This would be better here, a back test of that level, and then you target this level there. So if you had if it dropped, then maybe that's what you'd be looking for, something like that. That would be your trade. That's the SFP. This is if it dropped. And then obviously the other thing you could do is short if you lost this level on the back test. But I mean, again, I said that I don't know if I would be shorting with bullish CVD in play, but technically that would be the correct opportunity for a short. You let it break down, you get the back test of this neckline that it's broken. If it shows a reaction, you have an invalidation now, you take the short. And obviously if the price continues to go up, then you're stopped out, you're back into long mode, you know, because that would actually be a sign of strength. To lose a neckline, to reclaim the neckline, is a sign of strength. Then you can go back into long mode. Yeah, so there is a definitive line here, where if the price is going underneath this line, then you're looking for shorts, and if the price is holding the line, then you're looking for longs. That's kind of the situation that you're looking at. Good morning, Maxine. How are you? You're the only one watching. That's fine. But what I'm going to do is I'm going to put this in a little recording and then just chuck it up, so people, if they want their BTC update, they can have it. I'm actually, just for the sake of myself, because I wouldn't mind taking this trade, this SFP trades, I'm going to set an alert right now. Long SFP. And then I'm going to do the same thing here. This one I'm going to call it long spot. Looking for two longs there. And I'm not going to short, because I said, because of the CVD, I'm not interested in shorts right now. I like this reaction It's very strong. So potentially I'd be thinking that's something that I would be interested into longing with that momentum push. Did I not have a trend line? Okay, yeah, see. So I had this line from before. Maxine, do you trade Bitcoin? Are you interested in Bitcoin? What's your interests? I had this this trend line from that top to this to here, and actually it looks as though we're above it. No. See? It kind of held as resistance there, and now it kind of held as support. So there is a possibility. So that would be nicer down the Sunday, down, I don't know. We have to see how this plays out, but these are all possible. SFP, huh? All right. I think that's it. Oh, I didn't do a volume range as well. Let me just quickly do a volume pool and just have a look at that and see if that's telling me anything. I'm going to have to delete all these drawings again soon. Trades today. This, I'll put that there. Oh yeah, hodl, yeah. Maxine says, I'm not a fan about trading. I prefer to hodl. Yeah. I trade for fun. I don't trade for a living. You know, for me, the trading style that I have is long-term trading. You know, like cyclical trading. I'm not interested in day trading or whatever. I think it takes a lot of time, and you have to have nerves of steel, and you have to be 100% focused to trade. I don't think it's a good idea to trade if you haven't got that kind of mentality, and it is nerve-wracking as well, trading, you know, because you have to be prepared to accept lots of losses. I think with like higher time frame trading or cyclical trading, you don't have that same kind of emotional roller coaster, because the idea is very simple, you know, just dollar cost average in the lows and then basically dollar cost average out of the highs. Effectively, that's higher time frame trading, and you're not too fussed about the fluctuations on a week-to-week basis. You're not looking at the 30-minute candles and going, shit, my investment's going to nothing or it's going to the moon. You're not really focused on that. So, and obviously if anyone is hodling Bitcoin, they're laughing. Because look at that. You're laughing. So it doesn't stop, does it? So the strategy is always to buy strength. So the minute Bitcoin started showing strength, yeah, was here. This is the reversal, the weekly reversal. Yeah, this whole structure is a reversal pattern on the weekly time frame. Yeah, and you've come back above the previous low. Sorry. That's strong, you know. That's a really strong market structure, and the confirmation was this candle, you know. This candle was the confirmation, because you know it didn't look like it was going down. That obviously this was the expansive move. People saw that and they longed that. I was just buying TRVL. I wasn't even interested in Bitcoin. Obviously, I should have been doing Bitcoin because I would have made more money. But my long-term game plan has been TRVL since the last bull market. I've been thinking about the TRVL trade for 2.5 years. And part of that has been because of the fundamentals and the macro in with respect to how it's impacted my own real world business. So I saw how my business was benefiting, and therefore I was thinking to myself, well, this is a no-brainer. So Maxine says, yeah, same opinion. This is hard for my health, mental health. He says, I'm hodling. If we lose 10 to 50% during the day, it's nothing serious. I buy back at a better price. Exactly. You buy back at a better price. Or you just keep on buying, you know. And I think it's great because we are, you know, we are now buying. Like, it's hard. It was a lot harder when we weren't buying, when everyone was selling. So I'm looking at MEXC now on TRVL, and I've noticed this line here. Don't know if you can see it, but there, and most recently to there. 1, 2, 3. So we've attacked that line 4 times now. So that's quite a, it's becoming quite a weak line now. Slowly this line is weakening. This neckline. It's not a inverse head and shoulders, this neckline, not yet, because we're still in the head. Potentially could become some kind of inverse head and shoulders. We have to see how this plays out. So we could be in the right shoulder now. If this does this, we don't know how this is going to play out. It could be a really weird looking right shoulder, or it could, see, I don't know how this is going to play out. I don't really want it to go down, but I don't know. This is quite interesting. And then obviously when you're looking at the other exchanges, there is something similar but not as precise as MEX. Similar but not as exact as MEX. Yeah. I think it's very nice on MEX. Have a look at the other ones. This looks correct as well. This is 3 times. That's KuCoin. So we are potentially, you know, that could be the right shoulder. I mean, the right shoulder can look very unusual. Morning, David. All right. So David, just FYI, because you're going to watch it later, Bitcoin has bullish CVD. It's quite bullish at the moment. So just FYI, just in case you're interested. Let me have a look on Bybit as well quickly. Let's see if that's the same. Yeah, there is something going on here. I can't put my finger on it. And I don't know, you know, I don't know, like, is that, you know, there is something going on here. These highs with this kind of not so steep neckline that's forming. So before we had this, I'll go back to MEX. MEX is probably the best one. So if anyone is charting TRVL, go and have a look at MEX. Obviously we have had I'll get rid of some of the stuff for now. Get rid of that. Get rid of these channels. That's the one. The trend line is the one that I want. In this text. And go, there's this wipe of text. That doesn't really matter. Let's forget that. So that's all right, that's clear. So we potentially there's a neckline here. I don't know if anyone can really see it or agree with me, but potentially there's a neckline there. Yeah, so we had this higher time kind of trend line from there to there to there, which we broke, and we back tested on the weekly candle. Yeah, so this one's broken now, but the fact that we've gone in and hit another one which kind of lines up, and now we've hit it more than 4 times. If you consider that this is a weekly time frame, once, twice, 3 times, 4 times, 5 times, 6 times, we've hit this neckline now 6 times. 6 times. And the way it works is that the more you hit these lines, the weaker they become. Yeah, and eventually we will break this line, and I think it will be quite impulsive. The break is going to be very impulsive. Yeah, I think, for many reasons, but it is interesting also how this neckline corresponded with this 9-cent horizontal line that I have here. You see that? And I've marked this 9-cent line forever. So if you ever go back to my first video, I will always say that 9 cents is a significant level because it was the launch price of this token. And the fact that we've come up into this neckline and this 9 cents line roughly at the same place, roughly, it's like a smither away. Obviously it held. There was a bit of strength there, and mainly because it was the 9 cent line was holding. Yeah, not necessarily this neckline, but the 9 cent line. But the way it works with these higher time frame lines is the more you hit them, the weaker they become, and it's just because of liquidity. You're taking liquidity, so the next time there's less liquidity, so the next time there's going to be less sellers. People aren't going to be going, okay, I'm going to sell again at 9 cents. Some people will, but some people already have, and they're not going to do it again. They'll do it once, they won't do it twice. Yeah, or maybe the second time they'll do less. That's how it works. And so there's going to be less liquidity. So the next time we approach this level, there's going to be less liquidity, which will hold the price down. Yeah. And so this is quite interesting. I do have an idea that this is quite significant and potentially could mean for a bit of a breakout once we clear it. So just keep an eye on that. And probably MEX is the best chart to keep this line on. Let me change the color actually so we can see it clearly. And I'll make it thicker as well. There, that red line. See that? Oh, and it's quite interesting because there was a lot of confluence there. Because look at this mid channel that I have on this channel that I've drawn. There, you see that? Oh my god. See how powerful hindsight is? And you just don't know how the price is going to react, but it was obvious the price was going to reject from that level because you have so much confluence there. The next time it crosses, it's not going to be as powerful because simply we would have moved on and the confluence would be spreading apart in terms of this midpoint channel, in terms of this red neckline that I've got drawn, and obviously the 9 cent, they're going to be coming apart. So it'll be a lot less, and obviously because of the liquidity that we've taken in the first instance. This is quite interesting. Obviously if it happened earlier it would be more powerful, but I think the fact that if you zoom in a little bit, you see how the prices come into that level. Yeah, interesting. All right, so David showed me a higher time frame harmonic, and I just wanted to draw it out. And I had a look at this before, and I'm not going to draw it on this chart because this chart is already messy. I'm going to go on to, actually maybe I should draw on this chart. I'll just hide these then. Looking for that trend line in the higher frame ideas. Right. Let me pull up that. Let me pull it up actually, because I can't remember. So this is gonna look really crazy. This harmonic that I'm gonna show you, and honestly, I have no idea if this is gonna play out or not, because it really is unbelievable if it does play out. If it was to play out, then I'm going on a holiday. That's the plan. And then I told Cynthia, I said to her, Cynthia, when we get up to 1 point, whatever, the all-time high, I'm going on holiday. She said, Amir, you're never going on a holiday. That's funny. So I will go on a holiday if this plays out, trust me. So he's got this in reverse. David, why did you give it to me in reverse? It's so annoying. How do I turn this around? Oh, why did he give it to me in reverse? All right, I'm going to have to draw it in reverse. Oh my God, see that? Haha, I can fix it. Look, this is how I fix it. Let me delete it. Learned something new today. Reverse the chart, paste the drawing, and then reverse it back. And now it's back into normal. Is it? No. There. There. Reverse the chart, paste it. Should go back to normal. No. Why does it do it like that now? Do it before. Good morning, Craig Shot. How's it going? I'm guessing your name is just Craig. I'm just going to call you Craig Shot Gaming. I don't know. It's weird, huh? Right, let's just do it in reverse. This is reverse. I don't know why David sent it to me in reverse, and I can't figure out how to turn it around. There should be a way. Can't I just... No? Oh God, so annoying. All right. Let me do it in reverse, and then we'll see. Wow, it doesn't look good though, huh? This is not going to work. Let me go back to Signal. Let me download the image, and then let me try and rotate it first. Edit in. Open with paint. Let's try paint. Okay, I can rotate it. How can I rotate it? Edit. View. Rotate. Yeah. 180 degrees. Yeah, got it. File, save. Okay, good. I've got that. Edit. Select all. You're not seeing what I'm seeing, so don't worry about it. I'm just talking out loud. Okay, that's better. So, as I was saying, this is a... No, that didn't work. Okay, I need to mirror it as well. Give me 1 second. Now that I've done that, let me mirror it. Flip horizontal. Let me do that. Okay, sorry about this. This looks shit. But David sent me this harmonic, and basically I have no idea if this is going to work. No idea. Hold on a second. All right, sorry about that. I've got to have lunch in half an hour. So this could or could not work. I have no idea if this is going to work. So let me just draw it out first, and then I'm going to give you my thoughts. And we have had this idea in the past, but if I bring my higher time frame ideas, so he's looking for a B to B, that's the B. So the only one that I need to pull up is the time. Right. It's the time. And then the D and the X. Okay. Let's see. Technically, this is the harmonic. Let me see if I get the numbers right. I don't know what time frame he's done it on. 1.68, 618, 1.1, 1. It should be a 1-to-1 really. Don't know if it's a 1-to-1. Should that be a 1-to-1? That would be a 618. Up there. I don't know what numbers that should be either. Have a look at something actually. Go back and get the original one and see what the numbers are. That one he's got 688, so I think he wants 618. That's a 21. Okay, that's roughly what we're looking at, and that's like a 1 there. So something like that. That is a correct harmonic. It's called the 5-0. So let me just let me go and find a 5-0 for you guys. 5-0. Maybe it's not a 5-0 then. I don't know. It's quite longer though, David. It doesn't work really. That would be, it's quite long. This is not right. What he's given me isn't right. Because then that would be more like there. It would be there. That would make more sense. If there's a 5-0 like that. A. Let me check something else on sharp. think it's a shark. I think it's a shark, not a 5-0. It's a bearish shark. No, can't be because the C is lower. This is the one. This is it. A shark pattern. Let me look. I don't know. I mean, his idea was this. But then surely that's like this, no? No. I mean, this looks more correct, right? But then that should be in a line. It should be like that. According to this, that's a straight line. So actually that should be more like should be higher. Because according to this, that line is straight. See? Straight. I honestly think that is better. And then you have a straight line all the way up to hit the above the all-time high then. November 24th, it sells. Don't know. I don't want a bearish harmonic. I want a bullish one. That's the thing, isn't it? You want a bullish harmonic. You don't want a bearish one, but these are bearish. And this is a 5-0. Let me have a look at the 5-0 again. So look, a 5-0 is a sharp followed by a pullback to the D, which is actually bullish. So it's actually bearish at the C. I mean, they've labeled their points. They've labeled their points differently. So it's hard to know. Maybe that is back down there after all then. A, B, C. It's quite subjective because this makes more sense, because the thing about the bearish, this one, you need a straight line, whereas with this one you don't need a straight line. You can just go up and then across like this. See that? But then this this says C here, ignore that. This is D, ignore that. But this is prolonged. That's more of a prolonged move up to that point with a pullback, and so therefore the top of this B becomes your support level for a pullback to the D. Will it come in April to go up? According to this, then you're I mean, if this plays out, I don't know if this is playing out, we're just having fun, right? And then that will take us to December, which is quite a long maybe it goes up and then whatever. Maybe it goes up and then does that. I don't know. Because I don't really want it to end in December. I want it to end sooner. But obviously there's a big fib pivot. Craig is asking, does the D stay above the A on... I can't see because it's got a stupid heart on my front of my... Oh, that's better. Let me do it like that. Oh. Does the D stay above the A on the harmonic trader chart? Yeah. No, it's at the same point. So that's the back test of the horizontal level. So that would make sense in the sense that in terms of the Elliott waves that I have, if I pull my Elliott waves back up, this is wrong. Let me just pull it back. So if, let me just say that's the one there. No, I don't know. See, I don't, this 5 doesn't have to, like, who knows what this 5 is going to be. But if this is a bullish harmonic, so you would expect it to be more bullish. And then the 1 would be there. And the 2, you're looking for a pullback somewhere to go up to the 3. I don't know. So let's just get rid of this one. Let's just go with this one. So basically the D here is coming to backtest the A. So that would make sense to be a 4 on the Elliott wave, because the 4 would come, it can't come below the 1. So if we're in the 1 now, and the 1 ends at, but this means the 1 should end, it depends, like that means the 1 should end at 14 or 15, and I'd rather the 1 go I can't make it happen, but I'd rather the 1 go a little bit higher. So then that means then if the Elliott waves, then that 4 can't come underneath the 1. And then this goes back to the 9 cents. But according to this, I don't know if this is correct. Like, does the D have to come back to the A? Can it come higher? I don't know. But I think the idea is that from the B to the C to the D, that's 50%, right? So maybe it's only 50% that you should worry about, and not worry about whether it comes back to this point here. So let me just do it based on fibs. That's 50%. So look at the 50%. So you're expecting wherever this gets to. So let's say for the sake of argument, we go up to like $3.50. Then you're coming back to the 50%, which is 25 cents. And that would be, so it wouldn't necessarily matter about the B. It's actually what you're looking to do on this is whatever you get to this, then you're only coming back 50%. So maybe you don't care about that point. It's more about getting to the 50% of this move to go up. I think that's what this is. And the C is arbitrary. Maybe the C can be higher. And so you're still looking to come back 50% from this move. You're coming back 50%. And at the moment, this is perfect because the 50% would line up with the A. But maybe it can just be higher. I don't know. So this is something that we have to see how it plays out, if it plays out. Just keep an eye on it. I think this is better, and I'd like David to have a look, because his original idea was this, or this, just above the all-time high. I just don't see it. That would be a shark, which I had before, but even then that doesn't work, because then this has to be over here, and then this actually has to be, this has to be a straight line. So then that's what you're talking about, and that's bearish. It's not that's not a bullish harmonic, which I don't like. But you know, you have to go with it, whatever it gives you, right? So I'll leave that there for now, and then if anyone is a harmonics expert or anyone has another opinion, then please comment on this video or just message me or something, and we can have a look at your ideas to see what you think. I wouldn't be surprised if there is a higher time frame harmonic at play at the moment, just simply because of the way the fib time is working. I wouldn't be surprised there's other kind of fib stuff going on. So I think it's for us to just try and figure it out and discover it, you know. That's interesting, huh? Can you imagine? Let me see, actually. If I let's do this based on fib, actually, just for a second. I'm gonna do it roughly, because I'm not a fib extension. This goes up to $5. Let me get rid of this linear waves. So that goes up to there. Let's say you have a fib to there. That's your 50% at 30 cents. So coming down from $5 to 30 cents. It's a big drop. And then we'll do a trend-based fib from here to here to here, and our 1-to-1 is $94. And the 618 is $10 from here to there. It would be a big dropper to come all the way down from $5 down to 30 cents. That would be, I think a lot of people will be shitting their pants if that happened. They think it's really bearish. But actually, if this, like, this is the thing, if this harmonic plays out, this is a bullish harmonic, the entry would be the 50%, right? And so people who are following this harmonic wouldn't be afraid of entering at the 50% mark at 35 cents or whatever it comes to down here, because they basically be trading a harmonic, and then you'd obviously be taking your profits at the D here, and so there'd be a lot of capital injection at this lower point to push the price up. It'd be really bullish because a lot of people will be looking to re-enter. Can you imagine if you took your profits at $5.50 and then you had such an injection of volume at the 30 cents? You would get a really expansive move, you know. It'd be really expansive. But this is saying April, and if memory serves me correct, the last bull market on the 3rd week of April, Bitcoin crashed because it was like, you don't want to really be in crypto after May next year, because that's the saying, isn't it? May go away, whatever, sell and go away, whatever it is. And I think we have to be aware of that and maybe by May, maybe by the end of April next year, to just scale back your exposure to crypto, and just in case the history repeats itself and we get a big pullback on Bitcoin that lasts all the way through to July. So basically from the end of April next year all the way through to July, I almost want to be out of big positions, obviously depending on how far it gets. Got to be careful about that, because last time a lot of people got burnt, including myself, and you got to learn from your lessons. Yeah, it was a bloodbath, and it was the end of April as well. Craig is saying April, May 21. So so we're going to be aware of that, and and the problem is this, like so many people are going to be going for like super cycle. Institutions are here, countries are adopting all that bullshit. Yeah, like honestly, you just got to be risk averse. I mean, at the very least, you can't be all in. You have to be like half in and half out at the very least. You have to have enough dry powder to re-add on a pullback. And if it doesn't pull back and it goes up, then who cares? You're still making money. And that has to be the mentality. And so when it comes to next year at that time, I will be saying that. I'll be saying, if I'm still streaming, hopefully I am, I'll be telling people, look, you just got to be careful, because this is what happened in 21 and you can't be all in. You can't be all in. You've got to have enough dry powder for a pullback so that if it does happen, you can improve your position and not get hurt. So we have to see how that plays out, but I'm very careful about this. And it's amazing how this fib time lands at the 21st of April 25. You see that? I think this is quite amazing actually. So we have the fib time on this is landing at some really key events, moments. This is the end of November this year. This one is landing at the end of March, 18th of March, and then this one is coming at the 21st of April next year, and then the last one is actually landing in December. So in my mind, the bull market ends 1 month or 2 months earlier, because last time it was November, and the year before, the time before, it was December. That doesn't necessarily have to be true. Like, I don't know if it's going to be sooner or it's going to be the same as before, which would be December. And according to this, we'd have to see what Bitcoin, like, and so I'm subscribed to a trading group. I don't need to, but tomorrow, I don't know if you know the guy Daniel. He's doing an Elliott wave analysis on Bitcoin tomorrow evening, Sunday evening. I'm gonna watch that and see if I learn something from his analysis, because he's quite good when it comes to analyze the higher time frame Bitcoin charts. And so what I'll do is I'll take notes, and I'm just gonna repeat it here for everyone here. So you don't have, no one has to watch it. I can just repeat all of that stuff and see what he has to say, because he's quite good when it comes to Bitcoin. And we'll see how that lines up. All right. I think this is interesting. We'll keep an eye on it. Let me just put this in its own create a group of drawings, rename, time frame, fiber, harmonic, yeah. Get rid of that. What time is it? I've got to have lunch in about 25 minutes. I've got time to chart one chart. Someone wanted me to chart something. If you're not interested, that's fine. I'm just going to do it anyway. And then it's just creating content for the channel, so it attracts more people to the channel. People are looking at these obscure altcoins. They see the charting, and then they come and see Dtravel And so I finally persuade these people who are speculating on these shit coins to come and invest in Dtravel. TRVL, that's the plan. So so let me do that, and then if you guys aren't interested, I get it, no worries, you don't have to hang around. Now where was the guy saying it? Let me find it. This is it. Actually, someone on YouTube wanted me to chart something, and I said I would. So let me find that. How do I find it? I have to go to comments. Myro. Let me have a look at that. I'll have a look at both, and I'll see which one is more interesting. Myro token. Oh God. It's only new. Oh my God, it's gone up 1 million. Huh? Shit. Yeah, people speculating these 230 million market cap. I can't believe it. Crazy. These Solana tokens, huh? Let me have a look at this guy's one. It's Finn. No. Songbird Finance. This one's new as well, huh? Fully diluted valuation 3 million. It's quite a low valuation. 11,000 supply. Oh, they're all their coins are out, huh? Myro the dog. Oh God. Don't know. I don't understand it. Let me read this. Many may ask, what is Myro? Myro is the name of a dog owned by Raj Kogal, one of the co-founders of Solana. This project pays homage to him and his dog and responds to popular demand for dog-based narratives. What the fuck is this? This is bullshit. I can't do this. Dude, just... people need to stop buying these shit tokens with no value whatsoever. Just, I think all of this is a scam, personally. I can't wait until the day that this stuff is like banned or something, you know. And the guy who invented this is obviously making more money. He's just basically scamming people. That's how I feel. But all right, let me do Myro. Despite that monologue, I'm gonna do Myro. What the fuck? There's a lot of Soul fanboys, as Craig says, so let's do it. What a piece of shit. But let's do it anyway. Myro. I'll be really quick. Don't know which one's the best one. I'll just add all of them. Actually, let me have a look and see which one has the most volume. KuCoin. Right. KuCoin on X. Bitmark, CoinX. BitGet, KuCoin. It's interesting because MEX, you have like 2 red weeks. Okay, so you see KuCoin launched later. So actually, I'm going to use MEX. That makes more sense. Even though KuCoin at the moment has the most volume, I think in this respect, I want the most data, not the most volume, just because it's a new token. So you want as much data as possible on these new tokens. Look at that. Analysis. So the first thing you would do on a token like this is see what the all-time low is. And obviously we're almost in the all-time one day. So the all-time high was yesterday. So we're in price discovery right now. Let's just get the all-time low. Did I do that right? Copy and paste isn't working. Weird. 001995. 995. See, look, it says the all-time low is here. November the 11th. November the 11th. So this is a bit late, huh? Let me see if there's more data. Let me just check. Hold on. Let me just add them anyway because I want to see if there's more data. What's that one? That's the one. So it launched on BitGet first. I'll do it on BitGet. Yeah, that makes more sense. I think in this respect, you want more data just because it's a new coin. So, and actually look, it's the launch price was 0.01 according to this. And if you go and have a look at this, I'm trying to this is 0.01. Oh, that's wrong as well. Don't understand. Can't we get more data? Is that one? 0.01. What date is that? 0.01. No, 0.001. I don't understand why that's different. Price performance, all-time low, 0.001. 13th of November. It's just unbelievable. This token is already up 100x. I don't know how they got this all-time low, because I can't see it on the exchanges, but this is 0.001 and this is, yeah, so they're both saying the same information. I'm assuming that's correct, right? And I don't see it on the charts, so it's very difficult to know which charts to use. It's the problem with these new tokens. It's very obscure. The information is very obscure. So let me get the most data. So 24th of November, 24th of November, 27th of November, December, 21st. Okay, so we'll just use that one. It's got the most data. So the chart that I'm using is MEX, just simply because it's got the most data. But look, the all-time low is here. So this is quite, people have to be careful because they can't see the all-time low, and unless they go and do their research to find out the all-time low, they could get themselves in a lot of trouble, just simply because you've got people who are sitting on crazy profits. You know, like whoever came in at the all-time low is already 112x up on their investment. You know, that's a big deal. And have they taken their profits yet? I don't know. But I guess it's the people who founded this token, you know, they've got the most amount. We don't know who they are. All right, let's have a look at the volume. According to this, most of the volume is lower down. So 9x on the all-time low. The rise has been healthy in terms of volume, but now look, so this is the first cause for concern, and I'll show you. You've got 3 weeks of increasing price, and then you've got 3 weeks of decreasing volume. You see that? Increasing price, decreasing volume, increasing price, decreasing volume. So that's your first sign of bearishness. That's bearish. Doesn't mean it's not going to go up. It just means that you have to be aware that the price now is not because of the volume. The price going up is because of the lack of volume. So we are in price discovery, and no one is selling at the moment in the levels that require the price to go up with volume. And so you have to be careful, because at some point in time someone is going to sell, and it's going to cause a cascade of selling. And you can actually see on the daily chart how the volume is actually decreasing with this whole rise. This is a bearish rise, so you have to be careful with that. Now I can't really see Elliott waves at the moment, because I'm assuming this is the one. Yeah, that's a big assumption. I'm assuming we're in the one right now, and actually maybe this is the 5 of the one, and I can't really tell because I don't have all the data. So let me have a look on this chart. 1 2 3 4 5. Yeah, we're probably in the 5 now. Yeah, so if I do 3 months, no, 1 month, yeah. So I'm just doing on this chart because it has more data. Actually log doesn't help. So maybe this rise up to here was a 1, this was the 3, and now we're in the 5. You know, that's what I get from what I'm looking at now. And maybe this last rise is a low volume rise before a significant correction. So I think you should just, whoever's in this needs to be a little bit careful. And I'm assuming that this was I can't see, like, how do you create targets? I don't know, but let me just try. Yeah, we're pretty overextended. I don't know if this is a significant pivot because we don't have enough data. But if it is, if it is a significant pivot, then we're pretty overextended. You know, we're pushing the 1.618 into almost near the 2. I think you've got to be careful right now. And so the best way to, I think the best way to confirm an exit, if you're looking to exit or if you're looking to take significant profit. So on the extension on this range, we're already past the 2. It's pretty extended. I like this. So look, see that 2? It came into the line and now that's a significant line. I think there you go. I think if you lose that line, and I've marked it out here for you, it's 0.18159. If you get a close underneath there, then I think that's a good sign to get out. I think you've got your line in the sand now. And I think that's the best that you can go by in price discovery. You have to go by some kind of fib extension. Without all the data, it's hard to know. Yeah, it's really hard to know what the correct, how to go about this, but I think that would be a key line. And then look, from the all-time low, people are in it from the all-time low, not from here where we're at now, or from the all-time low. They're up to that point, they're already 91x up on their investment. You know, these people, if the price starts pulling back, they're gonna take profit, and if you're catching the highs, you're going to be underwater really quickly. The other indicator I think would be very good is this EMA 12. So get the EMA 12 onto your chart. Yeah, if you get a daily close underneath the EMA 12, I think that's game over. Yeah, just take, I think that would be like one of these EMAs which closely follows the price on this really steep trend is going to be your first indication of taking significant profit. So, and then obviously my favorite is candle patterns and candlesticks. So at the moment it's quite bullish as far as candles are concerned, but you've definitely got this line here which is your previous week high. And so the strategy, I think there's 2 strategies you can play now if you're looking to take profit. I think the first strategy would be a swing failure pattern of this current high now, and so the price will go up and then come back under, like a swing failure. If that happens, you can take profit much higher, or skim, or start skimming. And then obviously if you get a close underneath this EMA 12 and underneath this line here, then just get out. And then I think with a bearish extension like this, you have to let the price properly correct, and that's going to require some kind of higher time frame ABC. You have to see some kind of ABC before you look to re-enter again, and ideally you want to back test and hold this value area high. All right, so looking for some kind of ABC to go up potentially. But of course, if you lose this value area high, then this coin is fucked. Because you don't want to come back into the value area. Then you're going to be trapped for a while, for a long while, and probably heading down to test the lows. Probably you get back into this value area, I think the next target is going to be this wick here. Personally, this is going to be bad for the token. All right, that's enough for today, and I hope that helps. And I'm going to put this up as a video as well. So let's, yeah, all right, anyone else has any tokens they want me to have a look at, just post it in the YouTube in the comments, and I'm happy to oblige. It's fun. Have a wonderful weekend, and yeah, I'll see you tomorrow, probably. Take care, Craig and Maxine. Have a great day.